Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. So I'm recording this late Friday morning. The market's down here on the jobs report, but really the major indexes and most growth funds that we track are pretty unchanged for the week, give or take. And to me, just under the surface, this has been the second week in a row where there's been, more positive vibes than negative vibes. We've had the major indexes kind of have a quick retest of their lows and rally and hold those gains. We've seen some improvement from the broad market. The number of stocks hitting new lows is dried up. Not quite what we need to see, but a nice improvement really for the first time all year. Even during the March rally, it didn't do what it's doing now. And we're even seeing a few stocks here and there perk up, round out. Moreover, just anecdotally, I think we've had, George Soros and Ackman and I think Jamie Dimon was the one who said there's a hurricane coming for the economy. Microsoft cut guidance by a little bit this week. All this stuff happened and the market's kind of been hanging in there. So, the market might be starting to look over the horizon. We'll see. The way I look at it is if you're a team like the Celtics, go Celtics. It's like if the market was down by 22 points, it's clawed its way back. Now it's down by 6 or 7. It still hasn't done anything to win the game or anything, but it's back in a better position. So we'll see how it goes. That said, the intermediate term trend is still down. It's on the fence, but it's still down. Longer term trend down. Not many stocks set up, the whole thing. So it's going to take a little time, but so far, some positive baby steps here in the last couple of weeks. In Cabot Growth Investors model portfolio, I was close to doing a little buying, and I might here in the next couple of days. We're still over 80% in cash. But for the most part, I just think, like I said, the market's kind of put itself in position to do something, at least intermediate term wise. In the next week, we'll see what happens. It's kind of at a key juncture. So I think at this point, it's still kind of stay defensive and cautious, but keep your eyes open. If the market can kind of hang in there and push higher into next week, we could get a legitimate green light. Doesn't mean we'd go whole hog, but we start to put money to work and see how it goes from there. All right, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So here's the NASDAQ. And, again, when you step back, big picture or bigger picture, it's down 30%, and then we've had this bounce. So I don't think most people are going to sit here and say, well, it's a new bull market. We're all going up here. It's possible, but you need to see a lot more than that. Intermediate term wise, and I've explained this before, we need this green line. We need the index above the green line, which it is, but we need the green line, which is a 25-day moving average, to turn up, which basically means it has to be higher than it was 25 days ago. And 25 days ago was kind of in this zone right here, which was choppy for the market. So the NASDAQ's actually one of the weaker indexes on this basis that we follow. But you just need to see it really hang in here for maybe even a little bit more time and then kind of take a run at it. That could do the trick. So the next few days, I'd say next week, will be key. Other indexes are a little bit better. Like if you look at this is the IWM Russell 2000. It's actually it's hard to see on this chart, but take my word for it. The line is flattened out. And again, if we pushed higher into next week or today even, technically it could be positive. It's not something that we jump on. It requires a little bit of judgment. But we're just looking for this intermediate term trend to turn up. So it's kind of on the verge. This is, that's not updated through today. This is the MDY, the mid caps. Again, kind of flattened out. New York Composite, flattened out. S&P 500, I think, is a little bit worse. S&P 500 and NASDAQ, interestingly, are weaker than the broader indexes, which kind of interesting. One thing I did forget to mention in the intro was that on these 3 days here last week to end last week, so before the Memorial Day holiday, we had 3 straight days of 80% up volume on the New York and 3 straight days of 70% or more up issues, meaning at least 70% of the stocks were up, which is more than 2 to 1, obviously. It's not a real true blast-off signal. 3 days isn't enough for me, but it's, when you do look at it, it's relatively rare. It tends to lead to good things. And when it comes off a 52-week low or, a real punishing decline, it's usually near a market low. So it's a feather in the cap, but, we got to see more. So when it comes to the indexes, that's what we're looking at. The growth indexes or the growth funds are lagging a little bit behind, but just same sort of pattern. This is the QQQJ. This is the IPO fund. Again, 25 days ago is back here. So there's still some, swimming upstream to do, so to speak. But let's just see what happens. So far, these things have been able to shrug off some bad news here in the last 2 or 3 weeks. Maybe next week is different, but we'll take what we can get. And certainly a lot of bad news has been discounted. Whether it's enough, we'll find out. Okay, here's the IWO, which is the Russell 2000 growth. Again, the 25-day line is flattening out. We'd probably need to see, something up here, basically in the middle of next week maybe could do the trick. So you just take it day to day. Don't try to anticipate everything. Right now, still negative, but we're kind of in position to make a strike, okay? Other things I'm just watching, these are just sort of secondary or even tertiary indicators. Junk bonds have actually, this is HYG. I don't follow this that closely. I don't trade off of it. But they have been leading the way lower. Let me show you. This was the January low in the market. You could see it immediately fell lower. This was the February low, which was the invasion. And then we immediately fell lower, pretty quickly. Lower low here in early April as soon as the market came under pressure. And obviously it's just been sliding pretty sharply for a bond fund anyway. Now we have this sort of, again, this big rally, and we've pulled back here a little bit, but so far it's well off its lows. Just something I'm keeping a loose eye on. Let's say the market does sag a little bit more. Does this hold up? Is it a little bit of a change in character? Are we starting to discount, less bad economic stuff, less aggressive Fed? I don't know. We'll see what happens. XLP, I'm going to mention this one. It has come back from the retail. This was the sort of Target, Walmart apocalypse. It has bounced back, but it's kind of just sitting here while the NASDAQ's been doing better. I can't pull up the chart on MarketSmith, but take my word for it. Our aggression index, which is the NASDAQ compared to the XLP, kind of growth versus defense, has been perking up. Not enough for, again, a lot of these things have been perking up, look better, resisting bad news, but not enough for like a real buy signal yet. So worth monitoring, not quite there yet. SMH is the other one I wanted to just mention. It has been, you can see that this is semiconductors, actually poking above the 50-day line. So it's actually been, you can see relative to the market, this blue line is the relative performance line to the S&P 500. You can see it kind of bottomed back here in mid-April. Not that that guarantees anything, but it's just, telling you that a few of these more aggressive things are starting to kind of, the pressure's coming off them a little bit. Now it's down here today, so who knows? Maybe it hits the 50-day line and dies. But so far, it's the first sign of life anyway in at least a couple of months. Now, on the negative side, I'm going to get to a bunch of stocks to watch, both commodity and cyclicals as well as growth. But one thing I am still seeing, and this was one thing that popped up. This was really the one thing in March and April. Well, I shouldn't say the one thing. There's many things, but one of the big things I saw in March and April was we never saw, even though the market was rallying pretty nicely, any sort of stock that approached its old high or key resistance quickly rejected. And that's really that's a classic case of a correction or a bear phase or whatever. It's just that people take these opportunities to sell, not to buy. It's not the beginning of a run, it's like the end of a rally. And so last week we saw some of these lithium stocks, two of these. This is Albemarle, ALB. It kind of popped up above this resistance here. And then there was a couple downgrades. Goldman Sachs nailed the sector. So, you can always put a reason for it, but the breakout, so to speak, just quickly disintegrated. Now it has bounced back, and I wouldn't say the stock is completely broken or anything. In fact, if you look at the weekly chart, it's still kind of in this sort of base building phase, if you want to call it like that. But that sort of action, just to see that, is still kind of prevalent out there, which, it's descriptive. It can change tomorrow, but until we see it change, that's kind of it's not the best to see. Livent Corp, which is LTHM, same sort of thing. This one actually did ramp to new all-time highs here, and then just plunged from 34 to 27. It just doesn't seem like these are under control. I'm not going to make a huge judgment about the overall market on two stocks, but you would like to see some things, even if it's not all-time highs, just kind of poke above some resistance and just hold it. Even if the old highs back here, poke above resistance, hold it, get above some moving averages, hold it, and just kind of accelerate from there. That's usually how it goes. When we're still seeing this, it's kind of I don't say a red flag, but it's certainly something that needs to be improved on. All right. So when it comes to stocks, we'll start with commodities. I still think Antero, this is AR, is really the leading, probably one of the leading energy plays, but also the leading natural gas play. It's a pullback play to me at this point. It just had this consolidation in here. Things are a little hot and heavy. We had the gap up in oil earlier this week, stuff like that. It's a little frothy shorter term. So you can see this was the reversal on Monday. Maybe it goes higher, but I would just keep an eye on it. If you get a couple of days where this is shaking out down, 2.5 points a day for 2 or 3 days sort of thing, maybe you can take a swing at it, keep a stop under the 50-day, see how it goes. But that remains pretty good. One that's a little bit, I would say, not as strong, but also not as extended is Chesapeake Energy, CHK. Again, you had this big reversal. I wouldn't say it's the clear leader, but it looks fine. I mean, all this volume, buying volume up here, not that far from the 50-day line. Prefer to get it on some more dips, but that's another one to watch. In the oil service space, this is Schlumberger. This was the first one out. Of course, it was a little bit more of a laggard from last June to April, I guess it was, or maybe even early May. It really didn't do anything net. So now it's kind of pushing up. Good volume last week, didn't set the world on fire, but nice price action. And you can see, again, all these energy names reversed on Tuesday, I guess it was. Monday was a holiday, and kind of in here. It wouldn't surprise me if we get another, a little bit more selling in the group. But until proven otherwise, I think, it should be buyable. We'll see how it goes. Coal names look a little sloppy. This is Arch Coal. Some of them look good, actually, but this is Arch Coal, ARCH. And you can just see on the daily chart, it's almost kind of makes your eyes hurt. It's just all over. Every day is all over the place. So it could be topping out. On the weekly chart, though, it's kind of got this sort of base. It had this massive volume support in here. Let me change my volume scale. Let's see if I can do this. Yeah. So you can see how big this volume is down here. This was on, I think that was earnings and huge dividend announcement and cash flow and all that. And since then, it's sloppy, but it's just kind of sitting in there in this range. So it's almost like a base on base. Now, don't get me wrong. Maybe by the end of the day or next week, this thing is plunging down and I say, forget it. But until proven otherwise, if it can kind of hang in here, maybe tighten up a little bit and then thrust higher, it is something that has a decent pattern to it. Starbulk, I've mentioned this a few times. There's a couple of them here. Starbulk announced earnings, big dividend, blah, blah, blah. Not setting the world on fire, but again, I kind of like this base on base action. You did get some buying last week. It seems like it kind of wants to go higher, and it's actually kind of almost tight in here. I don't want to say tight, but it's calm, cool, and collected as opposed to up, down, up, down. So we'll see how it goes. Another one to watch in the group is Eagle, EGLE, smaller and thinner. You can see, again, the daily chart is kind of hard to look at. But again, the weekly chart, kind of a base on a base, and it's trying to emerge. We'll see how that goes, okay? On the growth side of things, the two, like lithium, the two stock groups, when there's only two stocks in the group, maybe not the most telling thing, but these solar microinverters, which are used for everything, these two stocks, SolarEdge is it's really almost a duopoly. SolarEdge is the second one. It's based in Israel, and you're going to see it's really done nothing here for really the beginning of 2021. So it's been almost a year and a half, and obviously some big, almost 3 legs down here. But now it's starting to pick up steam, has work to do, but this is the type of tennis ball action you like to see when the pressure comes off the market. Yes, there's resistance and all that. I'm just flagging it. Another one, which I actually kind of like a little bit better, is Enphase, which is ENPH. Same pattern in here. It broke out to new highs, but this was right near the market top. So again, you kind of have this 3 legs down within this huge base, almost 4 legs down. A lot of shakeouts. The other thing I like here is just notice how this is January, February, and May. The lows are higher, even though the market was doing, you can see the market up here, was doing that. And now again, as soon as the pressure comes off the market, the stock has taken out a little bit of resistance here in 190 or whatever. So we'll see how it goes. This is on my watch list. It has work to do, but let's see. I'm kind of flagging these tennis balls for now. I've mentioned Intracellular before. I go back and forth on this one because it's a money-losing biotech with a kind of small cap. It's $5 billion, $6 billion market cap. But it's got a great story, and it just keeps it resisted this entire decline. It had a big share offering back here, shook that off even when the market was getting hit. Finally got hit with the market and then soared on earnings. And now look at this. This is as of this morning, but it almost looks like 3 or 4 weeks tight in here, which is usually a sign that the weak hands are out. And the daily chart, same sort of thing. You can see it plunged, but then it's like this earnings move may have cleared the air. And it's just been chopping sideways here. It's not really a cup with handle. It's more of a V with handle, but nice legitimate base, huge sales growth going forward, but no earnings. And the chip space on semiconductor, I think I mentioned this a couple weeks ago. It really hasn't, you wouldn't know the market's getting destroyed or growth stocks are. And the stock is actually, as I record this, is up 6 weeks in a row, including this week. How many stocks are up 6 weeks in a row in the market that aren't energy related, even if they are? Probably not many. I should run that screen, but that's pretty impressive. And again, just the last couple of weeks, as the market's perked up, the stock is already back to within 10% of its all-time high. I'm also mentioning Global Foundries. Now we took a swing at this, glutton for punishment, This was like one of these first stocks to break out. It had the numbers, it had the chart, it had the breakout. And again, what I was saying earlier, in a bad market, these breakouts quickly fail. And that's what happened here. The stock got destroyed. And of course, the market growth stocks got destroyed. But it's kind of steadied itself. These IPOs are weird. It steadied itself near its recent lows. You can see it kind of built. I don't want to say it's the biggest bottom of all time, but 6, 7, 8 weeks. Perked up a couple weeks ago. I guess that was last week. Hesitated this week, but just kind of handling its own business. I do think there's going to be resistance up here, but I'm just mentioning it because we're seeing a few chip stocks perk up a little bit. I wouldn't say they're about to off to the races, but Global Foundries, I'm keeping a distant eye on it, but it has a little bit of work to do. Last couple more here. Blackstone, bull market stock. One thing I like about this on the weekly chart, had this big base. This was your vaccine announcement, and then you had this huge run. Well, so what, Mike? That was then, this is now. Yeah, well, since then, it really hasn't given up. You look at what it's given up of that move, and it's not that much. A lot of stocks have given up, especially growth stocks, all their pandemic rally. They're back down to here sort of thing. But Blackstone is just kind of hanging in there. Really barely dip below its January low. And you can see on the daily chart here, a little bit of a shakeout here below the low, but basically held this level and now is really, again, perked up. It's got resistance. It's got the 200-day line, but just flagging it. It is on my watch list. Chart Industries. This one's more of it's a little bit of a infrastructure play for energy, building terminals, but this has this is kind of a big, almost like a cup with handle base, if that's the game you want to play. I think this was some sort of share offering or index rebalancing, so it's not that meaningful. And it's kind of just hung out here, nice little pattern. Let's see if it can break out. I'm not sure I'm going to be jumping on it, but I wouldn't mind seeing something break out and hold the gain as opposed to break out and come right back in. And last but not least, I want to mention this because I have been looking at a few of these. This is Toll Brothers, which is housing, which you'd think would be getting killed. But this is a higher end home builder, number one. But you can just see it's had a big decline. It's not for me. But on the weekly chart, it really has been bottoming out here for a few weeks. Kind of like on semiconductor, I noticed this is up, let's see, 1, 2, 3, 4, 5 weeks in a row before this week. And this week, it's barely moved. You can just see on the daily chart, these last 4 days, barely moved here, which again, usually a pretty good sign. We'll see what happens, okay? I just found it interesting because I believe this was its earnings day. It was one of the biggest volume days in years, or at least a year or two, I think, for the stock. I think weekly, yeah, you can see biggest volume here for a while on the weekly chart and on the daily chart. And, just with interest rates going up and all that sort of thing, you'd figure that these would be getting hammered, but they actually stopped going down a couple months ago. So just kind of keeping a loose eye on it. You can see the moving averages start to turn up. I find that kind of interesting. Again, maybe we're seeing some signs with the market, like with junk bonds, might be looking ahead to not as aggressive Fed hikes, or the economy, if there is a recession, it's going to be over within a couple months, something like that, okay? Just back to the market, though, there's sign. I guess what I'm saying is there's rays of light out there, but let's see how it goes. We've fallen 30%. We had kind of a quick little double bottom in here. We've rallied and held the gains here amidst some bad news and some bad, terrible predictions sort of thing of what's to come. And just let the market tell its own story. I mean, if the market just keels over again, okay, well, we're just going to stay very defensive. But, if things can kind of piece one step at a time, there'll be reversals, there'll be whipsaws, there'll be some challenging things. But let's just let the market tell its own story. Right now, like I said, it's put itself in a position to maybe do something, at least intermediate term. But we actually have to see some green lights first before, putting any real money to work. Okay. All right, that's all the time I have for today. As always, thanks for listening, and come by again next week for another Cabot Weekly Review.